Good morning everyone. As we all know that RBI has gone for a rate hike of 50 basis point. Does it really mean that the markets will not perform in times to come? Does it really mean that the investor sentiments will go for a toss? Is primarily an incorrect hypothesis. In order to tame inflation at one end and to have a calibrated growth at the other end, the RBI has taken up the steps. It is probably because of a lot of geopolitical events which are taking place at this point of time. For example, the Ukraine-Russia issue and China's zero-COVID policy, because of which markets are into the negative sentiments at this point of time. However, it is expected that when the mean reversion of the index will take place, approximately 14 to 18% of the returns is expected to come out from the markets or is expected to come out from the index. And at this point of time, if the bottom fishing is done in a very appropriate manner, the returns would be more than what is expected out from the index. And a lot of sectors, for example, FMCG, telecommunication, banking and financials, textiles, which are underperforming at this point of time, you will see a substantial return coming out from these sectors, specifically in the next 2 years. There are also a lot of geopolitical events taking place. For example, the companies are moving out from China and getting settled in India at one point of time, and also at the other point of time where the coalitions are taking place at the geopolitical level, where the semiconductor manufacturing is to take place within the emerging market space, is also a very important step, because of which a lot of FDI is bound to come in the country, and at the same time the equity markets are going to perform in times to come. So guys, stay invested, stay